For me, it's and just to be clear, and I'm big on transparency. What I've been doing in terms of my personal investments is I basically decided that when we were in that 17-ish thousand range, that I would start accumulating a little bit of a longer term hodl position in Bitcoin. But what I did before I started to do that, I took a certain amount of money. I said, this is what I feel comfortable based on my net worth, et cetera, for putting in Bitcoin. And I divided it into 6 portions, equal portions. And I took that first 1/6, then I put it in around 17 and change. And then the idea is every 3,000 down, I'll just add another 1/6 until I accumulate. This way, I'm not trying to be a fancy trader here and pick the exact bottom, because honestly, I'd probably miss it. But at least I have exposure on the way down if it does start to rip higher.
Bitcoin is beating records this Christmas as sub $17,000 price action sparks unrivaled pain for hodlers. Data from on-chain analytics firm Glassnode shows that both short-term and long-term investors are sitting on more losses than ever before. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing Gareth Soloway updates about Bitcoin's current market standing, the prospects of a final bottom in crypto, and the bear market strategies that should be adopted by novice investors in these times.
Right now, we had the FTX fiasco. The issue here is that since that's occurred, we haven't snapped back. We've been kind of staying in the lower ranges. On a technical basis, that's short-term negative, right? And again, it's called what's called a bear flag, or in spirit of bear flag. So at least in the near term, going into January, I do think there's a little bit more downside, but there are some positives. I'd love to show you guys some charting action here. One of the positives, and in general, I'm a huge long-term bull on Bitcoin. It's just, I'm also a trader. I'm also a trader who lived through the .com era. That was the early part of my career. So many similarities in how stocks and penny stocks ran in the late 90s and then collapsed to where crypto was over the last couple of years. But one of the positives for Bitcoin, and why I think, yes, there's downside, but I actually think we're going to make a low in 2023, is that we saw the Terra Luna collapse here and price dropped on Bitcoin 45%. Then you had the FTX collapse and price drops 23 or 25%. And so you could arguably make the case that FTX was a bigger deal for crypto than the Terra Luna collapse, but price lost a smaller percentage. And so I think for me, that's saying to me, okay, we're getting closer to that bottom, even if we're not there. Couple things that I've kind of been playing with, and I'm a stock market guy by trade. You know, that's how I grew up. I started again in the late 90s. Crypto wasn't around until 2009. But one of the things that I've been playing around with is comparing the FTX collapse and its impact on the industry to the Lehman Brothers collapse in 2008. And I think that's really interesting in terms of the fear. And remember, when you're trading charts, you're trading human emotion, right? When someone buys, they're greedy, they think it's going up. When someone sells, they're fearful, they think the price is going to go down. So really, you can compare different charts, different time periods, historical charts to what's going on, because it tends to repeat over and over again. So if you look at that, you know, Bitcoin, or at least the S&P 500 after Lehman Brothers, dropped another 45%, and it took about 6 months. So for me, in terms of where Bitcoin could bottom in 2023, I'm looking at 6 months out from the FTX drop, which is right around May to June. And then also we're looking at, you know, right around that 10,000-ish area, potentially, maybe a little bit below in terms of Bitcoin. I also think that with Bitcoin, the 10,000 will be a max pain. And Scott, I know you know about this stuff in terms of, you know, where do you force the most fear out of people? And it probably would be around that 10,000.
Since the FTX meltdown sent crypto markets tumbling, BTC USD has failed to recover. Its descent to levels last seen 2 years ago has created problems for hodlers who bought in more recently. Logically, they are nursing negative returns on their positions. The pain runs deeper than that, however, and Glassnode now shows the extent of unrealized losses plaguing newcomers and old hands alike.
If you look at the stock market, and the stock market's now been in a bear market since basically the start of 2022, and you've had these, you know, in bear markets, you tend to get what's called rip your face off rallies, right? Where you have these mega sized reversals that make people think the low is in. And we really haven't seen that. If you look at Bitcoin, like the biggest rally we had was this right here. and you haven't seen that. So I agree with you that in a weird way, you'd almost expect it to catch people off guard and kind of rip up to 20 or 30 before that next leg potentially lower. That I think at some point in 2023, and it could be a contagion even from the stock market. I'm actually very bearish on the stock market. I think we're heading into a recession, and so I think prices in stocks will go a lot lower. And I almost think that that's going to be the kicker for why Bitcoin declines up into a point. I think that once we get some regulation in the space, which really regulation is code for transparency for all us retail investors. We need transparency now. And I think once we get that, then you're going to start to attract big money. If there's one thing I realize, and you can see it with the big money that was invested in FTX, big money is now 100% on the sidelines. I'm not seeing any movement in the hedge fund industry to invest in crypto until there's transparency, because they have this fiduciary responsibility to safeguard funds, and there's just no clarity now.
For both short-term holders and long-term holders, current BTC price levels are a nightmare. They are defined as entities hodling incoming coins for less than or more than 155 days, respectively. According to the latest figures, as of December 26th, short-term holder Bitcoin held at a loss totaled 1,889,585 BTC, with the long-term holder tally at 6,057,858 BTC.
Looking at Ethereum, for instance, one of the things you were talking about is what is the max pain? Could it be to the upside? And the one thing I'm watching here, right, is this trend line right here, this downsloping one. I saw you had it on Bitcoin. It's basically the same sort of thing. And notice how you have this little mini bull flag right here. All right, now we are backing off. Stock market is down today again. But if we could break this level, I would say around 1,235, 1,240, you actually have the potential to retest this high and maybe even get to a longer term trend line. Let me erase this one. This would be a longer term up move.
17-ish or something.
Yeah, back to about 1450 to 1500.
Okay,
so I think that's kind of interesting there in terms of maybe we get a short term move up before that next flush to the downside. A couple things that I'm watching here on it, right? So, and that's a great point, because there's, let's say I only have a tiny position and it goes up. And so you can see here, this longer term trend line on Bitcoin did break through it. So I'm looking at this one here. All right, this kind of one connecting this high. And essentially, if we were to make a strong move up, right? So essentially, this is your big drop on FTX, and that now becomes my zone. All right, so if we were to rally up, let's say we break above that level, and let's just say we do go to 25,000. What I then look to do is, I have to admit that this bigger bearish pattern has now failed. And what I would do is I would look to buy what we call a retrace to the scene of the crime, which is basically the retrace. And so once something breaks out,
flip of resistance to support. Right.
Exactly. I'm never one to chase. Like, chasing is the cardinal sin in investing and trading. What you'll do is you always get pullbacks. You just have to know what levels will now be support, and they are former resistance levels. So for instance, I would then start to pick some up right in this range if we can take out. And I think the FTX high is that's now the level to beat, as in terms of charting. Like, that is a psychological point where if we could break through that, now you're talking about potential further upside.
While some metrics are calling time on the 2022 bear market, analysts believe that a new macro BTC price bottom is still to come. A popular target is $10,000 for BTC USD, which is potentially due in Q1 2023 as weeks of sideways action with hardly any volatility come to an end in the new year. In terms of its retracement from all-time highs, however, Bitcoin still has room to fall, having not yet breached the 80% threshold common to previous bear markets.
Let's just say we do break above this area, all right? So you have two options, and one would be obviously a retrace to this FTX high, same kind of thing right there. The other one would be this one back here, which I actually kind of would favor because it's a longer term trend line, where same kind of thing is you get the big breakout here. Let's say all of a sudden we do get some regulation that potentially is positive for crypto in terms of transparency. It causes a price spike. Then I would look to buy the pullback back to that level. So you're looking to buy, 1400-ish area, 1450 on that trend line retrace. Drop at least another 25% on the S&P next year. So I have a short-term target probably for the first quarter or so around this 3,400 level on the S&P. That correlates with the COVID pre-high, right? Just before the COVID collapse. That was where we were on the stock market. And then we have a longer term trend line that really goes back all the way back to 2009's lows. And you can see here, the only pierce of that line we got was the panic in COVID when people thought the world was ending, basically. Aside from that, that's kind of my target for next year, which is around 3,000 on the S&P. So you're talking, 15, 20% at minimum, maybe even a little bit more. My thesis for why Bitcoin bottoms and the stock market doesn't is that I think that with regulation and with an economy that kind of is going into a recession, you're going to see earnings decline. So there's going to be an earnings recession in stocks, which means they're going to make less and less money, which means their valuations have to drop, stock prices have to drop. But with regulation in crypto, the funds, the big money is going to feel more comfortable about protecting their assets by moving into something like Bitcoin, like an alternative, kind of like a digital gold, if you will.
Yeah.
And I think that's going to be the kicker of why we could see Bitcoin actually far outperform in the next few years the stock market, even if the stock market goes down. In fact, one chart I'd love to show you guys here. Let me show you this. Let me see if I have it on the chart. So one of the things that I've been looking at is the comparison. And this is kind of a scary comparison, so take it with a grain of salt. But essentially, if you go back to the dot-com bubble, so this was your dot-com bubble in the S&P. Then you had this decline, which was the collapse, the real estate bubble, the financial crisis, and then look at the move up that we made all the way to recent highs from that point. And what's scary about this, Scott, is that if we go to the Dow Jones Industrial Average chart, and I go to the monthly chart and we scroll all the way back, and again, by no means am I mentioning this to create any sort of panic, and I don't want people to panic because there's always ways to trade it. But look at the comparison in the chart from the mid-1915 period, and look at that, and then look at the run into the Great Depression. And again, I don't necessarily think we're going to have a Great Depression, but I think we could be in a prolonged bear market in stocks. And it is kind of scary to see the similarities in the kind of M pattern, the mega insanity, which was the roaring 20s, with what we've experienced over the last 10 years since 2009 or 13 years. So kind of little things like that I pick up on. I'm a student of history. I think that you learn a lot about the future by studying history.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.